All right. Good evening, everyone, and thank you for everyone who's joining us tonight. So tonight we have Tom Fuentes with Bank of California, and tonight's topic is going to be you can bank on it. Some of the information that it goes over is just describing financial products and services available, provides information on selecting financial products, and information regarding some federal credit unions, I believe, right,
Yeah, that's right.
Tom? Okay. All right. So without further ado, I'll go ahead and pass it along to Tom.
Thanks, Lisa. Welcome, everyone. I absolutely love this one because right off the bat, as you see on our uh, title slide, the teller putting a tube into this contraption so that the man in the car can make his transaction. So, quick story, real quick before we start. So, I've been in banking for a long time, 20-ish years or thereabouts. Uh, and I used to work in the branch, and the branch that I used to work at had this system, and I was the one that got to operate it, and it was fun. That's my story. It was just like people still use these. I don't know the last time you went to a bank that had a drive up system like this, but our some of our branches still have them, and we'll actually talk about it again in a few minutes. But this is a, a kind of an added bonus of being able to do some transactions.
That's
So
actually really neat. I haven't seen those in a while.
yeah, they just don't use them at CVS for your medications anymore, and that's just fresh in my mind because I went to CVS the other day and they had the similar thing anyway. But
Uh,
yeah, so there's branches that we have that actually have this system, and it's really cool because they operate outside of business hours sometimes, because sometimes different banks, like just not Bank of California, but other banks will have these systems, and sometimes the branch will be closed on the inside, but maybe they'll be open an extra hour on a Friday so that you can use it. So kind of cool. So yeah, this is you can bank on it. It's really like an intro to kind of like understanding different banking products. So in the first section, and there's quite a few slides on this one, but because this is kind of basic or intro kind of banking product stuff, we should go by pretty fast and we'll make sure that we have time for questions at the end. So first section is financial product services and providers. And the key takeaway is, and this is the biggest thing in in my opinion, because you really need to consider the things that you need at your current financial situation calls for. So consider the needs and make sure that you shop around for different products that actually suit you now. Meaning, like we find ourselves at different parts of our lives needing different financial requirements. Um, like I'm in my 40s now, and I'm starting to look at different financial products in the terms of retirement accounts. So it'll be things that kind of suit your needs at the moment. Where it was different, like when I was in my early 20s and I shopped around for a credit card because I didn't have one and I wanted to start building my credit. That's something I don't worry about now because I pretty much have the same. I've had the same one for like the last 27 or 25 years or so. Yeah. So just make sure that you're shopping around for the things that you actually need for your given financial situation. Um, Sorry, there's this Zoom bar in the way and I can't see where I'm at. Give me one sec. Sorry. Yeah, so financial institutions, the two basic ones that you're going to have that have like physical brick and mortar locations are banks and credit unions. There's other financial institutions out there that are more app-based, like what's one that comes to mind, like SoFi, I guess, that don't have physical locations that still allow you to use banking products and services. But for our purposes right now, we'll talk about banks and credit unions. The purposes of these institutions are to accept deposits of your money. And what they do is they actually use that money that you're depositing to then lend out to people in the form of loans that they charge interest on. And that's pretty much the banking operation and how they bring in revenue. Um, they may offer other products and services such as credit cards, car loans, personal loans, mortgages, student loans, for example. So to give you an example, just remember this, all banks aren't created equal in the sense that you may be able to get a student loan from Chase, for example, but the bank I work at doesn't do student loans. Another example of why all banks aren't created equal, you may be able to go to Wells Fargo, for example, and get a mortgage for your house, like a residential mortgage. The bank I work at, we don't do residential mortgages, which is why, depending on the needs that you have right now for your financial situation, is why you'll need to shop around because not all banks offer the same products and services. All right. Yeah, so what are the differences, right, between banks and credit unions? So banks have customers and credit unions have members. There's usually no membership criteria in the form of banks. You go in and you open an account. Credit unions, however, membership criteria, right? So has anyone ever heard of um, teachers credit union, or sometimes there's firefighters credit union, or police officers association credit union, or credit unions affiliated with a religious identity, for example, like Christian Community Credit Union. So those require you to have to meet that criteria in order to become a member. If you don't fit that criteria, however, you can become a credit union member simply by having a family member who fits that criteria. Banks are owned by shareholders. Sometimes those banks are publicly traded, and you can own shares of their stock. Credit unions, however, are nonprofit organizations that are owned by the members. So we're going to talk about the differences in terms of your um, of keeping your money secure with both banks and credit unions. So for a bank, they have the FDIC, or the Federal Deposit Insurance Corporation, which is going to protect the depositors' money in case the bank fails. I don't know if you remember, at least in recent memory, last year there was a slight very mini micro banking crisis that hit regional banks. And there was a run on a few banks, and customers took out large portions of their deposits and the banks failed. They come to mind Signature Bank and I forget the other big one. My memory is short, I guess. And then the 2008 financial crisis, where we saw a lot of banking turmoil. Um, but even in the case of bank failure, just know that you're protected by the FDIC up to 250,000 per depositor. So what does that mean? That means that if I have my own account and I'm the only signer on the account, that means that my money is insured to 250,000. If that financial institution where I have my money fails, that I will be reimbursed up to 250,000 in the case of a bank failure. I have a checking account where I'm a co-signer with my wife. That means that I'm protected for 250 and she's protected for 250. So we're protected for 500. So just remember that it's per depositor. And then on the flip side of that, for a credit union, it's NCUA. That's the National Credit Union Administration, which protects funds for depositor and federally insured credit unions. So a little bit differently than the FDIC, but it's still up to at least $250,000 for NCUA. So how do you access services? So we access banking services through brick and mortar retail locations. And nice thing now, go on to your mobile app or even on your computer, check out your bank's website. You can see all their locations and where they have ATMs, for example. So you can take advantage of depositing money, withdrawing money, making transfers, checking your account balance, so on and so forth. You also can access services through customer service phone numbers and email. Now, again, all banks aren't created equal. This is why I really want you to shop around. Not only shop around for products, but you're shopping around for services too. Well, what do I mean by that? Well, if you end up getting an account opened at one of the large national banks like Chase, Wells Fargo, Citibank, Bank of America, you call a customer service number, it's going to be people that are located in a call center which isn't a bad thing. They're going to help you and they're going to provide you the best customer service possible. But when you deal with a smaller bank like my bank, that's a large regional bank in California, when you call a customer service number, you're actually calling your branch and you're talking to the people that you would talk to that like when you would go into the branch. We don't have customer service people that you're talking to. It's the people physically located in the branch where you do your banking. So little difference. We hope to provide a little bit better customer service because it's the people that you're dealing with face to face that you would deal with over the phone too. Another way to access services is through websites, mobile banking apps, and smartphone apps as well. So financial institutions offer deposit products, credit products, and other products and services. Deposit products can be in the form of checking accounts, saving accounts, money market accounts, certificate of deposits. And again, the way that financial institutions make money is that you deposit that money so that they can offer credit products. They take the money that you deposit, they lend that money out, and they charge interest on that money. Credit products can be credit cards. They could be different kinds of installment loans like auto loans, student loans, mortgages. It could also be um, residential mortgages or even like corporate finance for office buildings and stuff like that. Other products and services is whether or not like when you open your checking account, do they offer a debit card or an ATM card? Um, do they offer a mobile app? Things like that. So deposit products, we already went over that. I guess I was talking ahead of the slides there. And credit products again. Let's go back really quick. I want to make a point of this though. Savings accounts different than checking accounts. Savings accounts meant to build your savings with compounding interest. The difference between savings and checking accounts is that saving account usually offer an interest rate, where checking accounts usually don't. Now, there is a difference though. There are some financial institutions that offer high yield checking accounts, but really a savings account has a low transaction threshold. And actually, most savings accounts don't even allow you to do more than like 6 transfers a month. So savings accounts are really meant to be low transaction accounts that are meant to be utilized for savings so that you can use compounding interest to save money for the long haul. Where the difference is on checking accounts, high transaction account, you're meant to do your everyday banking needs out of that account. Certificate of deposits are like savings accounts, except they're timed, meaning that a certificate of deposit is opened and you sign an agreement that you're going to keep it open for a certain amount of months or years. And they typically pay higher interest rates than savings accounts. And then money market accounts are similar to savings accounts, but again, offer slightly higher interest rates. Credit cards are going to be an option for you that you can use on a daily basis. They more than likely have high interest rates, though. Not all financial institutions will offer credit cards. And I want to make a point on this too. Not only do not all financial institutions offer credit cards, but sometimes if a financial institution does offer a credit card, they don't even facilitate that credit card, meaning that they outsource a company to facilitate credit cards for their needs. So that if you have a credit card and you're calling customer service, sometimes it's not even the bank that you're banking at. It's a different company. And I think it's that some people don't even realize that. There's also different types of credits. You can get a personal loan. Personal loans often are higher interest. There's also lines of credit like overdraft line of protection on a checking account. Um, there's installment loan options, and I already mentioned these like auto loans, mortgage, residential mortgages, and student loans. So other products and services, check cashing. You can go into your financial institution and cash a check that isn't drawn on your financial institution. You can also purchase money orders, which are like checks, but the money is taken out from your account immediately when you buy the money order. And the nice thing about a money order is that if you lose it, you can put it stop payment on it, just like, or excuse me, that would be a cashier's check. We'll get to that in a second. Some offer prepaid cards. Some offer debit cards so that you can have access to your money at an ATM or use it for transactions at a retail store. You can purchase a cashier's check, which is similar to a money order. The money is drawn out of your account immediately, and you can use that to make a payment. And if you lose a cashier's check, you can put a stop payment on it just like a regular check. You also have access to ATMs. One of the cool things about certain banking institutions, and I can speak about a credit union in this case because I have a credit union, sometimes different financial institutions will partner with other retailers and companies to offer free ATM withdrawals. So for example, my credit union, I can go into a 7-Eleven and take money out with zero transaction costs. So that's kind of cool. There's also the ability to have access with ATM cards. ATM cards can be used at ATMs only, different than a debit card. We'll get to that in a sec. You also have the option for online and mobile banking. There's also P2P, person to person. So one of the features of the credit union that I have is Zelle, for example, that you can use to pay people directly. So credit lines include credit cards, lines of credit, installment loans, and mortgages. Installment loans being loans like student loans, mortgages, and auto loans. Installment loan basically meaning that you're agreeing to pay on a monthly basis a certain dollar amount with a certain interest. Whoops, I think this is repeating now. So other financial service providers could be like convenience stores. Some certain convenience stores you can go in and you can cash a check, for example. US post offices allow you to go in and purchase money orders. There's also stores that sell prepaid cards. In fact, even retailers like Walmart, you can go in and purchase money order. There's also check cashing stores and outlets that you can go into, but just know that that could get kind of dangerous because they do charge you fees. Payday lenders too. Those are dangerous though, because not only do they charge you fees, but they charge you interest. Pawn shops, vehicle title lenders, where you can they'll hold your pink slip on your car to take money, but those are very, very, it's a slippery slope, we'll put it that way. Financial products and service can help you to save money. Like we talked about the difference between savings and checking accounts. And the purpose of a savings account is low transactions because it's meant to build your wealth over time. And then checking accounts different than a savings account, right? A checking account is a high transaction account that allows you to spend your money. And then you have the option of using the online services and mobile apps of your financial institution to manage your money and track your money. And then financial institutions also will allow you to borrow money in several different ways with the different credit lines that they offer. But again, you have to start with what you need first. This is a do it in the participant guide. We won't go over these, but you can do it on your own after the workshop. And this particular do it is based on the financial management needs of Susanna. And you can complete it and maybe kind of think about the financial situation that you find yourself in at the moment. So again, the key takeaway for section 1 is making sure that you're hitting the needs of your financial situations with the different products and services that are offered from different financial institutions like banks and credit unions. So opening an account, know the general process for opening a savings or checking account, including options if you're initially unable to open an account. Safety and security is provided from the FDIC and from the NCUA, as we already talked about, up to $250,000. Certain accounts will earn interest depending on the account. Like we talked about, savings and money market accounts, for example, are interest-bearing accounts. And sometimes you'll find a financial institution that offers a high yield checking account that offers an interest rate. Those are often a lot lower yielding, however. And then recognize the difference in the convenience factor. You wouldn't use your savings account as your everyday account because it's meant to be a low transaction threshold account. You would use a checking account. And again, I sound like a broken record every time we do these financial literacy workshops, but my number one thing that we talk about in every single one is make sure that you're building a relationship with the people that work at your branch, especially the manager, because you never know if you're going to need to go in and ask a favor or just need something out of the norm. Building a good relationship with the folks that are at your physical branch location is worth money itself. And then understand the important consumer protections. So one of the things that kind of gets lost, and even on me as a banker being in banking for so long, is that financial institutions are federally regulated, meaning that you have protections as a consumer based on the various regulations that are passed down by the federal government. There's things like Reg E and Reg EE that dictate a financial institution's ability to hold a check and how long they're able to hold a check. Yeah, things like that. So you do have protections built in when you're opening an account. Again, in your participant guide, this Do It is going to be a checklist on what you need to complete the opening process for a checking and savings account. Feel free to do it after. It'll go through different things like completing the application, verifying your identity, opting into certain things, which we'll get to in a second, actually. Understand that even if you open an account, that account's not necessarily considered open until you make the first deposit. So for example, if you went online to open an account and you didn't fund it, it's really not open until you make that first deposit. The other thing that's important too is to receive all the disclosures that are associated to the account that you're open and to review them, because there's going to be certain terms you need to be aware of in how to operate that account, okay? Banking history reports, this is really, really important. Not everyone will be approved for an account. So there's this one thing in the financial institution world called check systems that is a entity that all financial institutions use. So if you ended up having an account in the past that ended up being closed because it had negative funds in it, more than likely that financial institution will report you to check systems. Once you're on there, you'd be unable to open an account at any financial institution. Okay. So anytime you have unpaid negative balance on your account or you're suspected of doing fraud on related accounts, you could be closed and you could be reported to this entity. So keep in mind that you have the ability to receive a banking history report every year. It's important to make sure that you're not only protecting yourself on the basis of making sure that you don't overdraft your account and have it closed with a negative balance so you get reported to check systems, but because identity theft is such an issue now, that you need to make sure that you're checking this report to make sure that no one's opening an account in your name that has used your identity to have a checking account that they overdraw, because then you'll get reported to check systems and you don't even know about it and you didn't even do it. This is another Do It that you can go through to understand different banking reports. As we just mentioned, check systems is one of those that you're going to want to use to make sure that you're not on it so that you can open an account. And then this other one in the participant guide is going to go through how you would file a dispute. So there is a general process and guideline in opening different types of accounts. Make sure that when you're going in that you receive the disclosures and you read and understand the terms and conditions and how that financial institution will facilitate the terms and conditions for those accounts, because they'll be different depending on the account that you're opening. And know that even though you're opening an account, that the account's really not open until you fund that account, until you make that first transaction. So we'll talk about managing an account. There's rules of your account and how to keep track and use it. It can help you keep costs down and develop positive banking relationships. So we kind of covered this already. Like savings accounts really are low transaction accounts. they're meant for you to deposit money that will earn interest. So that interest and your future deposits will compound over time so that you can use that as a method of building wealth as a long time. It really wouldn't make sense for anyone to open a savings account and transact on it a lot. It's more of a deposit money into it on a daily, weekly, monthly basis and forget about it and don't touch it. Because once you start taking money out of it, you're losing that ability for your money to compound over time. And another do it in your participant guide to talk about how to manage a savings account appropriately and how to keep track of deposits and withdrawals and account statements. So make sure that no matter what the account really is that you understand the rules of your account. And what I mean by that is certain financial institutions are only going to allow you to transact so much on a savings account. You're only allowed to do 6 transfers between accounts from a savings account each month. If you go over it, you could be charged a fee. So make sure that you're keeping track and you know the rules of how to operate the account. For a checking account, this is a frequent use account, multiple transactions, unlike a savings account. You're allowed to deposit money, do bill pay, make purchases, access cash at ATMs, for example. You also can have an ATM card or a debit card linked to that account. Those cards aren't the same. ATM card meant to be used at ATMs. You can take money out, you can deposit money, you can transfer between accounts, you can get account statement balance. Can't use it at a store though. Unlike a debit card where you can do all those things like an ATM card, but you can use your debit card at Walmart, for example, or Target to actually make a point of sale transaction. Also, a checking account allows you the ability to write a check out of it, and you can pay bills from it. Understand though, checking accounts do come with their downsides, if you will, overdraft fees. There's actually in the news a lot right now. There's a lawsuit going on. I can't remember what bank it is, but they're going to have to pay a penalty for excessive overdrafts. I can't remember which bank it was, but make sure that you know the amount of money that your financial institution is charging you for overdraft fees and for non-sufficient fund fees. You can opt into this. You can opt out of it, meaning that if you opt in and you go and try to use your ATM card when there's an example we'll get to in a second. In fact, we'll wait for the example, but you can decide whether or not you want to participate in this whole thing. So let's go to the example real quick. So Rodney, for example, he opted in, he's got $50 in his account. But on March 1, he does $85 worth of transactions, $15 on a birthday cake. I don't know about you, but that's a good price on a birthday cake. I feel like birthday cakes are kind of expensive, but okay, 15 bucks on the cake, $25 on gas. That's pretty cool. That's cheap. Okay, maybe he didn't get a full tank. $45 for a phone bill. All right, $85 total, right? But he only had 50 in his account, which means that he overdrew $35, right? So the overdrafts will come in. There's one or two because overdrafts will come in depending on how those transactions are processed by your financial institution. Meaning that depending on how they process those, you could get hit with one overdraft fee or two. But just know that they're going to charge you a fee regardless if you opt in. Okay. Nice thing about a checking account, even a savings account, right? You can do a direct deposit. You don't physically have to take your check into the branch to make a deposit or take your check to the ATM to make a deposit. You can set it up with your employer to have them automatically send funds to your account. In fact, I have money split. I have a tiny, tiny micro fraction of money going into a savings account. I don't know why I do it. It's kind of pointless. And then I have money going to a checking account. So yeah, and the nice thing about the direct deposit is that the money is available immediately, where if you take a check in, they could place it on a hold. They could place it on a hold depending on your banking history. They could place it on a hold whether or not you opened a new account. Some financial institutions will treat you as a new customer for the first 90 days and put all of your checks on hold for a certain amount of time. And you can totally bypass that by doing direct deposit. Another cool thing is automatic bill pay or automatic debit. You can have an automatic bill pay set up through your financial institution to pay your bills monthly. The other cool thing is that you can set up an automatic debit on the retailer side, or even like an automatic debit like with SoCal Gas or Edison to pay your electric bill. You give them your checking account and your routing number, and they'll automatically debit your account. Again, this is in your participant guide. Check this out. This is really cool. This is learning the different parts of a check. We'll go through it really quick. Number one is your identifying information. Number two is the date. Date is very important. Make sure you have the date on there perfectly. If the date is too far in the past or too far in the future, they won't negotiate it. So make sure that your date's accurate. Number three is the check number. You can use this in your check register by tracking the checks that you're writing. Number four is who the check is payable to. Very important too. Make sure that it's paid out legibly and to the correct person, because if it's not, sometimes it won't be negotiated and it won't be paid. And don't leave it blank, by the way, too, because if you leave it blank, anyone can get a hold of the check and fill it in and go cash it, right? Five is the numerical value of the check. But here's the difference. Six is the written out number of the check. Banks do not negotiate checks based on the numerical amount. They base it off of the written amount. So if the numerical amount is different than the written amount, say, for example, this is written for 75.85 numerically, but it's written for $100 in the written amount, they'll cash it for $100, okay? Number seven is your financial institution. Eight allows you to make a memo so that you know what it is that you paid. Nine is your signature. Make sure you're signing your signature exactly how you signed it when you opened your account, because they will match your opening signature to the signature on your check. 10 is your routing number for your financial institution. Every financial institution's routing number is unique to them. 11 is your account number, and 12 is a repeat of the check number. So managing your account, there's rules for a checking account. You can keep tracks of your deposit withdrawals by using a mobile app. You can keep track of it by using a transaction register. Another thing that you can do, which is something I do, is I don't download my statements. I get them sent electronically, but I go online to view the statement that my bank creates, and I look through it to make sure that I recognize all the transactions I made. We don't make too many transactions in a month, so I'm able to kind of remember and identify the ones that make sense to me. So yeah, again, see, review account statements is the thing that I do. You can keep track of holds on your debit card based on statements as well. You can also set up email and text alerts based on transactions. You can also link your checking. You can link your accounts together, if you will. Yeah, so there's several different ways. I recommend this too. I think transaction registers are kind of like out of style these days. I mean, I'll be honest with you, and I'm a banker and I'm ashamed to admit it, but I don't use a transaction register. I use the account statements to make sure all my transactions make sense. But you can check out this situation with a SIF to understand how to use a register. And you have an example here. So it's a way you can do it. The way that you would do it is that you would write every single transaction, debits and credits, money coming out of your account, money coming into your account, and you would balance this against your account statement at the end of the month. This is the way to know to the penny that there's no funny business going on with your account at all. So if it's something that you want to do. So we talked about ATM cards earlier, right? ATM cards are to be used at ATMs, okay? And that's it. So you can go to your financial institution, you can check your account balance, you can withdraw money, you can deposit money, you can make a transfer between accounts if you have those accounts linked to make transfers. Where debit cards, on the other hand, will do everything that I just mentioned that ATM cards can do, but you can actually go to a retailer and make a purchase. Not only can you go to a retailer and make purchase, but you can also set up an automatic debit with them. For example, my automatic debit set up with my cell phone plan is that they debit my debit card every month instead of my checking account. Okay. But understand the difference. Even though a debit card has a Visa or a MasterCard logo on it, it's not a credit card. So when you're using it, it's debiting your checking account. Whereas a credit card is not linked to any of your financial institution accounts. It's its own account that it's taking money out of and you're getting charged interest on. Okay. There's also P2P, person to person. That's like Zelle, that's like PayPal, Venmo, that kind of thing. Cool thing now, financial institutions adopting this way to send money out to just people. Like if I owed Lisa money and I knew she had Venmo, she would just give me her email address and I just send her money directly. And financial institutions getting on board with this, which is cool because I feel like Zelle's been around for a while now, and you kind of see that popping up a little bit more. And it's nice because you get the money debited from your account immediately, and the person on the other end gets their account credited immediately. So I really like it. I think it's really cool. It's especially too like in this example where it's talking about reimbursing for lunch. Like if you go out to lunch and you know everyone at your table has PayPal, I mean, isn't it so easy instead of you using your card and then them giving you cash and all that, where you can just drop them money? I think it's really cool. There's also mobile wallets like Google Wallet, Apple Wallet. Those are the two that come to mind. You can store your debit card, credit card information into the account. And then if you have, I believe it's called, I forget the technology that's in here, but you tap because
NFC or something like that.
that's what it is. NFC, yeah, near field communication. Yeah.
That's what it is.
So if your phone has NFC capabilities and you have a mobile wallet like Google Wallet, like I could store my credit card in here and not have to carry my debit or my credit card around. Now, I'm way old school. I tried this when I first got an NFC phone, and I just felt so weird. And I felt kind of naked not having cards in my wallet. I abandoned that plan immediately. But hey, um, check it out. Try it maybe. That way your wallet will be thinner. Mine's thick because I got too many cards in it. So if I used my phone, maybe I wouldn't sit lopsided in a chair, right? But yeah, so those are pretty cool. Um, and this is actually going to bring us to our end because the next section is talking about prepaid cards, and we're not going to get into that. But um, so learn the rules of different accounts, how to manage those accounts, and way to keep costs down on those accounts. Because like we reviewed, savings account meant to be a low transaction account where you're not supposed to take money out of it because it's wealth building, right? But they have their limitations, and you don't want to get hit with fees by over transacting on that type of account. Whereas when we talked about a checking account, it's a high volume transaction account. But be careful because if you end up uh, trying to spend more than you have in the account, you'll get hit with overdraft fees and NSF fees. So just understand the rules of the different accounts that you have. When you go to open your account, make sure you get those disclosures. Ask questions to the banker who is opening your account in case you're unaware of how to, say, use and manage your debit card, for example. Okay. So that'll bring us to a conclusion. If there's any questions, please feel free, drop them in the chat or unmute yourselves if you have any.
So Letty had made a comment. It's kind of lengthy. Letty, if you can unmute yourself just to kind of give us a little bit more information. Um, you were stating something about your Bank of America account during the pandemic and your benefits disappeared. So I'll go ahead and just read it.
Oh,
Yeah, so she said she had a bank account with Bank of America that was opened by EDD for unemployment benefits. Now during the pandemic, some of her benefits disappeared. Since I had delayed to go and deduct all of my benefits out, and there was a $12,000 limit, I had heard that perhaps this was a reason why it seemed all my benefits weren't showing up on the mobile bank account, but was showing up on my Social Security site as received by BOA. But once I catched
uh-huh.
up that money, yeah, never reappeared back. on the account. So the time frame disappeared from 2/13 of 2020 to 6/2020. I had also filed two disputes after a lovely employee had me on hold for an hour, and she so kindly took the disputes and informed me that she wasn't supposed to take my dispute since BOA was drilling it in their heads. But other than that one time BOA constantly said that they couldn't receive my dispute and instead would have to call Social Security office, which they never would pick up. What advice would you give?
Yeah, I have three main points for this one. So the first one is that I think that you may have been able to catch this earlier if you looked over your account via either the register method and then balancing that to your account statement, or doing the thing that I do, which is very regularly, not too regularly, maybe like twice a month, I'll go onto my mobile app and I will look at my transaction history visually by scrolling through it. And then at the end of the month, I look at the account statement so that I make sure I recognize all the transactions. So that's the first thing. I would just say take a look at your transactions any way that you feel comfortable so that you can catch things early. So that's the first thing. The second thing is that these deposits are automatic. So anytime you're dealing with Social Security, EDD, anything like that, you're giving them your routing number and your checking account number, and they're automatically depositing that money. What I would say is that if you're regularly making sure that the transactions in your account are recognizable to you, it would be a good way to catch if they make a mistake. So even though you're dealing with the government still will make a mistake. It's just not automatic that they're going to do the right thing every time. Okay, the third thing of this, I would say, is that if we're shopping around for products and services based on the financial institution, you may find yourself receiving better customer service. And I'm not talking bad about large banks because they have their benefits too. One is that they're everywhere, so you can find a branch location. There's no issues in finding an ATM. And well, they're large, meaning that they have a large deposit base and they're pretty solvent, meaning that they have a lot of money. And anyhow, but on the other hand is that if you went to a credit union or you banked at a regional bank like mine, when you're calling customer service, like we were talking about earlier, like when you called Bank of America, you were dealing with someone in a call center. And I'm not talking bad about call center folks either. I'm sure they provide the best customer service possible. But if this was a situation at my bank, you would have went into well, you could have done it over the phone. And when you call the phone number, you're talking to the person that works in your branch, meaning that the person that worked at Bank of America that you were talking to, you can't walk into a building and see that same person face to face. Where if you called us, that person you're talking to on the phone, you have the option to walk into a building, a branch, and talk to that person face to face. So that opportunity to connect and build that relationship in person is more viable and can help the situation by allowing you to receive just better customer service and maybe better dispute resolution. Not only that, when you do a dispute with us, you have to go to the branch because they need you to physically sign it. So you would end up going and talking to a banker in person anyway. So those are the three bits of advice I would give for a situation like that.
Thanks, Tom. I
Mhm.
had a quick question. Can you kind of clarify for me? You mentioned something about money market accounts and having higher interest rates. Did you mean higher interest rates that I would pay, for example, or would the return
Yeah,
be
that would
higher?
be returned to you.
Oh,
So
higher return
it's
rates. Okay.
yeah,
And
so
then,
it's similar to a savings account, but it should yield higher interest rate in for you that
okay.
so that you can take advantage of the compounding interest. It's usually higher yield. They have a better interest than regular savings accounts.
Okay. Yeah, because so compound interest is just basically what you earn from your savings or anything like that. Is that correct?
Yeah, but the compounding is is uh is a mechanism in which not only are you earning interest on your initial deposit, but the idea is that you're making regular deposits, say daily, weekly, monthly, yearly, meaning that the way that the money compounds is that you're not only earning money interest on the initial deposit, but you're earning interest on the several deposits that you're making after that initial deposit. Meaning that if you have an initial deposit of $50 and you have a 5% yield, if you make $50 deposits every month, then you're earning interest on all of it. It's almost like climbing a ladder. So that's the compounding portion. So
Okay.
you build wealth by not only making deposits regularly and not taking money out. By the way, you can't compound if you take money out.
Mm,
So by building the rungs in the ladder, you're earning interest on all that money, and that's how it compounds. So the
okay.
compounding is twofold. It's the interest and then you making the deposit.
Okay. And then, so we can always just find out with our bank to find out like how much that compounding interest comes back, right?
Yeah, what I would
Or-
recommend is they're not going to tell you the compounding part.
Mhm.
They're just going to tell you what the yield is. They'll tell you what the interest rate is.
Okay, sounds
So
good.
what I recommend is I would go to Google and type in compounding interest rate calculator, and you'll get things that come up from like bankrate.com, NerdWallet, things like that. What you can do is you plug in your interest rate, you plug in your initial deposit, and then you plug in the frequency of your future deposits, and then you hit calculate. Oh, and by the way, you can put in a certain time length too. 5 months, a year, 5 years, 27 years. And it'll give you a like an amortization schedule of all of the money compounding for that length of time. So you can
Mm,
see what
okay.
it builds to. Yeah.
Does that also count towards like, for example, like let's say I deposit my check and then I transfer money from my checking to my savings. So that would also count as like depositing into that account, right?
Yeah, yeah, because it's
Okay,
fun
good.
as long as you're putting money into that savings account, it doesn't matter the
Okay,
method. It could be a transfer, it could be anything really. Just as
okay,
long as you're putting money into that account, you're good.
okay.
Yeah.
Sounds good. I got some work to do then.
But I say check it out. And not only
Yeah.
are calculators like this good for savings accounts, but they're really good if you decide, once you've built up a good savings account, like in an emergency fund and all that, and you have some money in retirement, if you have, remember, because this is all based on financial needs that you find at your current state, right?
Hmm.
Meaning that your financial needs are going to change from time to time. So if you find yourself in this situation where you finally find yourself in the financial need to invest money, there's calculators out there that not only are for compounding interest, but there's calculators out there where it's like you want to buy a stock or a mutual fund where you can plug in all the information and have it be a certain time length, and it'll tell you how much that investment will grow over time. So these calculators, man, check them out. They're really cool.
Okay. All right. Sounds good. I'll do that. All right. So thank you to everyone who was joining us tonight. Next session is going to take place on the 8th of February. Let's see, what is the topic for February 8th? I have to fast forward my calendar. So
Could I ask one more question?
go
Yes,
ahead.
yeah.
Yes.
Um, I was on with the Bank of America situation.
Hmm.
Um, so I took pictures of the online bank statements, right? And then I took pictures of the benefits also as well. And I still have them now, but I noticed that the Bank of America was I guess they had some type of a computer error between these dates. I think before June 2020. Um, and so what I didn't say was that the person that had me on hold for an hour was going crazy because a lot of people were calling in saying that there was money missing from their accounts, right? And it was more than, she said it was a lot of people, like a lot of people.
This sounds
Now,
familiar. I think I
yeah,
read this in the news.
but every time that I would want to talk to somebody in person as well, they would tell me that they couldn't talk to me and that they couldn't open up a dispute because of the fact that it was a regular account.
Okay,
Um,
so did this ever get resolved?
it never got resolved. No.
Okay, this is what I want you to do. I want you to go when you have some free time. I want you to go to the Consumer Financial Protection Bureau website, CFPB.
Okay.
I'll put it in the chat. So remember earlier in the workshop, we were talking about knowing your rights as a consumer. This is one of them. Consumer Financial Protection Bureau. Whoops, I spelled bureau wrong. Google this, go to their website and file a complaint. Okay, that's a good start. File a complaint and see if you can get any headway with this agency. And then maybe you can get some resolution out of using them. So good luck. It should help a little bit.
Thank you so much.
You're welcome. And then
Yay.
yeah, February 8th, as you were saying, Lisa, was your income and expenses.
Correct, your income and expenses. So we'll see you guys that Thursday at 6 p.m. Same time, same Thursday, and same meeting and passcode. So we'll see you guys next month. Enjoy your night. Thank you so
All
much,
right,
Tom.
thanks everyone.
All right,
Bye.
bye. Have a good night.